Throughout the country, the number of homes that are taking a price cut is the highest amount in the past 18 months. Is that the first indicator for a housing turn? We're gonna dive into that. We're gonna look at foreclosures. We're also gonna look at inventory. Let's go. 6.4% of homeowners that were listing their homes for sale took a price cut because homes are sitting on the market a little longer right now. And Redfin reported that the national weekly median price took a decline of about $3,000. Why am I bringing that to you? Because that is the first pullback in about 6 months. And interest rates have been high or higher for the entirety of these 6 months. But yet it is the first time that there was that price pullback. Now I want to put this in perspective, because while prices pulled back year over year, prices have increased annually 4.3%. Also, a report from Altos Research this week said that almost 35% of homes on the market took a price cut. And by July, we could have almost 40% more inventory compared to this time last year. All of this news right now that I just gave you is a good thing for buyers, and it's something that sellers need to be aware of when they're going to try to sell their home. But again, I want to put things in historical perspective. I'm not saying the housing market is going to crash. I am saying that because of the higher interest rates and higher prices, it's starting to see a softening. Now, this softening will largely depend on where you live in this country. Every market is a little different. Do not expect the market in Austin, Texas to be the same as Atlanta, Georgia, or Charlotte, North Carolina. Every market is a little bit different, so please reach out to a local real estate professional in the area you're looking to buy or sell, because depending on what you're after, there's different dynamics at play. But one of the main reasons why houses are sitting on the market longer is that there's a decrease in mortgage applications. See, mortgage applications is the first sign of people looking to buy a home, because most of them have to apply for a mortgage. Compared to this time last year, mortgage applications are down almost 6%. 5.7% to be exact. So if you're in the market to buy right now, you need to do these 3 things. And some of them may seem like common sense, but hear me out. First, you need to get pre-approved. You need to know how much home you can afford, especially with this interest rate right here. Because if you got pre-approved last year or 2 years ago, well, interest rates are different. So just because you can get approved for a $500,000 home last year or 2 years ago, doesn't mean you're gonna get pre-approved for a $500,000 home now if you're still making the same amount of money with the same amount of debt. Secondly, I think you need to be a little bit more open in your home search. Go to areas and locales that are a little less desirable, but still, if you have kids, obviously you want a good school area, but be a little bit more flexible, and also look for that home that's been sitting on the market for a little while or has a little bit more dated look, because what I'm seeing right now, and I'm in the market every single day. I own a real estate brokerage, and we have about 115 agents right now. So I get to see what comes across the desk and what's happening and what's selling. Right now, the homes that are a little dated in the areas that aren't as desirable, you're able to get in at an excellent price. You're able to either come in below asking price, and in addition to that, get seller concessions. So not only did you get a discount on the price, but you also got money from the seller to buy down your interest rate to make your mortgage more affordable. And third, what I would like for you to do is to not let your eyes get too big that your wallet cannot fund that home for a long period of time. What do I mean by that? I mean, just because you're able to get pre-approved for $500,000 per se, doesn't mean you need to go find a home that's $500,000. I want you to live comfortably within your means. The pre-approval process is just looking at the numbers. You know what you spend on the monthly basis, and you know what you're comfortable with as far as making a mortgage payment. So you may need to look at homes in the $400,000 range, because life be lifing at times, and you need to make sure that you have some wiggle room just in case life starts lifing. Now let's talk about mortgage moratorium. I know it's 2024, and you probably are wondering, why are we still talking about a mortgage forbearance or moratorium? Stick around. Real quick, I'm Sir Ashley. Thank you for rocking with me. Thank you for watching this video. On this channel, we talk about real estate, personal finance, and you will see some videos about the Carolinas. If any of those things interest you, go ahead, hit that like button and hit that subscribe button, and share this with friends and colleagues. Thank you. And for doing so, please check out the description below, because I have a couple free goodies. Let's get back into the video. That is because the VA, the Department of Veteran Affairs, has extended their mortgage moratorium to the end of this year. I know a lot of people did not know that there was still a mortgage moratorium for veterans, but there is a mortgage moratorium, and the one that was announced back in November expires May 31st. However, now it's been extended to the end of the year. The VA also unveiled the Veteran Affairs Service Purchase Program back in April of 2024, and it's an option to prevent foreclosures for veterans. So if you know any veterans that are struggling to make their mortgage payment or just struggling financially, please make them aware that the mortgage moratorium for VAs has been extended, and there is a special program to help them if they're experiencing financial difficulty due to COVID-19. Now, before we talk more about foreclosures, let's talk about pending home sales and what NAR put out just recently. They just put out a report that said pending home sales in April, we don't have May's numbers, we have April numbers, those just came out. Pending home sales dropped 7.7% nationally. Now, the biggest month-over-month declines happened in the Midwest and out west, but pending home sales declined in all 4 regions. That includes the North and the South. Now, you take that data of pending home sales declining and the amount of sellers making price cuts, you'll see that there is a softening of the market. That doesn't mean that home prices are going to crash. However, it means that everybody is price sensitive, especially when interest rates are where they are. See, when interest rates are at 2, 3, 4%, people were pretty loose with their money because getting it was very cheap. When interest rates right now are higher, people are becoming more frugal and a little bit more cautious before they move forward with a big purchase like buying a home. Now let's talk numbers and put things in perspective to make it real as far as what's coming out of your pocket. If you bought a home priced around $407,000 and put 20% down at a 7% interest rate, your monthly payment would be about $2,200. But studies show that right now, first-time home buyers are putting about 8% down. And if you factor that in, 8% down on a $407,000 home, your monthly payment will be about $2,500, making it a lot more unaffordable for a lot of people. So that is the reason why you see less buyers on the market, less people getting approved, and homes that are for sale sitting on the market a little longer. Now, we touched on the VA mortgage moratorium and mortgage forbearance, and I've been seeing a lot of pundits talk about foreclosures being very high and shooting up to record levels, but is that actually the case? Let's dive into it. According to Housing Wire and the data research firm CoreLogic, it says that U.S. mortgage delinquencies remain near historic lows. So while mortgage foreclosures has increased in the past few months, actually, they've been pretty consistent the past few months, but while they've increased compared to this time last year, if you look historically, they still remain very, very low. In fact, in March 2024, the national delinquency rate for residential mortgages stood at just 2.8%, and that is the 3rd month in a row that it stood at 2.8%. It hadn't gone up, it hadn't gone down, it's pretty consistent the past 3 months. Now, the state with the largest amount of mortgage delinquencies is Louisiana at 5.5%. So all the people talking about mortgage foreclosures increasing a drastic amount and gives the illusion that there's going to be a ton of foreclosures on the market in the future, the data just doesn't back that up. In the comment section, let me know what you think about this housing market. It is all over the place. Depending on the price point and the location, homes are selling fast, but as I just reported, a lot of homes are sitting on the market a little longer. It really depends on what you're looking for and where you're located. I'm Sir Ashley, your real estate advisor, and I'll catch you on the next one.